Hello and welcome to the Flock Freight Q3 2026 U.S. Freight Spot and Contract Market Rate Outlook. This is Chris Biggett, Chief Commercial Officer. We're back to read the tea leaves and share our thoughts on where we close Q2 and where we see the next quarter going with regard to supply, demand, capacity, and rate behavior. As we can see in the chart, you're really kind of in the middle innings of this inflationary leg of the cycle. We think this particular cycle will peak out, somewhere north of 60%. So there is still room to run. If you look at that yellow line, it's really a proxy for the penalty cost of shipping error. If you're on the buy side, this creates, I think, a lot of opportunity where if your trucks aren't full, this represents pretty material savings in terms of leveraging other modes like shared truckload to avoid the idea of paying for inflated truckload capacity you don't need. If you're on the supply side and you're the one that's operating that capacity, this represents a heck of a lot of opportunity. If the freight in the back of your truck is not full, lots of upside in terms of looking for top off opportunities, put more revenue generating freight in the back of that truck. And certainly we believe that Flock Freight is one place you can go to find that. So again, look for spot rates to continue marching higher. Contract rates to continue following suit. We now believe contract rates will top out somewhere north of plus 15% year over year by early 2027. Primary drivers going into this quarter in terms of what's going to, I think, move the needle from a rate standpoint. Really kind of what happens with this seesaw journey of diesel prices, with the on-again, off-again war with Iran. Impact on crude oil flow through the Strait of Hormuz is wreaking an awful lot of havoc on global energy markets and price of the pump. The higher that diesel rises, the more inflationary pressure that puts on the supply side. The opposite is also true, so we'll see where that goes in Q3. We've got the end of summer seasonality, food and beverage season, patio and gardening, household goods moving, the start of back to school. We talked about that inventory stocking need, so we do believe that see some volatility, seasonality, but an overall broader trend towards wanting to restock that should drive increasing volume capacity. What we don't think is going to move the needle is the impact of the Supreme Court ruling on Montgomery versus Caribe. While this certainly could create some long-term movement in the marketplace, we do not believe that that fundamentally changes market behavior or rates in the balance of Q3. But we'll be watching closely. So again, that's where we're standing. Look for more inflation ahead. Much livelier spot market and contract market following suit. And we'll be back in the next quarter to talk about it. Thanks.